Hi, I'm Jason with Level Up Investing, and in this video I'm going to talk about what I call panic investing. And what is it and why is it not my cup of tea? So in this video I'm not going to talk about any specific stocks, but rather discuss this concept because I think it's important, especially in times like they are now. So when a major event happens, often a catastrophic event, then a lot of times panic does set in, both at the personal level and at the community level. And when things start to change from our daily activities, people not going to work and factories shutting down and entire industries closing shop for a while, then of course it affects the economy. And so the main issue that I wanted to talk about in this brief video is how the economy tends to get affected when something like that happens, and what I'm seeing a lot of my friends and colleagues doing when it comes to their investment strategies when there is an event and they start to panic, and probably most importantly, my approach towards it and how I try to avoid any type of panic investing at all. Okay, so what I've drawn here is my very simple schematic of how I've seen the stock market for the past several years and also for the past several days. So coming up on about a dozen years, we have been having this bull market run here where over time the stock market price, the stock prices have been steadily increasing, having dips here and there, but then overall steadily increasing. Well, when a major event, a catastrophic event happens, like in the last few days here, what we've seen is a drop in the stock market value in the Dow, the S&P. I just wrote 20% here, but it's in that ballpark, 20-30% of the value at the height of the market there. So what happens is, what I've seen a lot of my friends and colleagues, what they do when they take a very undisciplined approach to stock investing is they're very reactive. So over the course of several years, when the stock price of any specific stock, as it's going up, the mentality is, oh, okay, it's getting better. This stock, this company, for example, is really increasing in value, and I don't want to miss out, so I'm going to buy right here. And then they're happily seeing the stock price continue to go up. Maybe they have dividends, maybe they don't, but it'll go up, and then they'll say, hey, you know what? It's still going up, and there's no sight of it dropping or stopping at all, so I'm going to buy more. And then so what they'll do is they'll continue to buy and basically follow that market all the way up. And then they'll get to a point where an event occurs and there's a drop, and that's when the panic sets in. Wait a minute, why is there a drop? Oh, okay, I don't want to lose all my value. So what do a lot of people do in that situation? Well, you guessed it. They decide, you know what, I'm gonna sell. I'm gonna cash out, and I'm gonna take whatever profits I made compared to when I first bought it. If it's here now, okay, this is when I'm gonna sell. And that's where the panic investing comes into play, where they will look at where it is and they will worry that, you know what, just like there was no sign of it stopping going up, hey, there's no sign of it stopping going down, so I don't want to wait until the market completely dies, so I'm going to go ahead and sell. That's what a lot of my colleagues and friends will do, and it's really panic investing, panic decision making. And so let me go over a little bit about why that's absolutely not the way to go, at least in my opinion, and how I approach investing, especially in a quote-unquote panic or event situation. Okay, so now here is a schematic of more my approach towards value investing. First of all, I choose specific companies that I want to follow, that I want to invest in, companies that have shown a good track record. For me specifically, I want to buy dividend-bearing companies. But companies that will have a product that I understand or a service I understand, and I have a good sense that their management is good and that they will weather the storms. You know, if there's a major event, then they'll adjust and they will move forward and continue to grow and expand and be profitable. So here's the same, first half of this is the same graph as I just showed you, ups and downs, but overall ups in a bull market. So when this occurs, let's say this 25 to 30% drop, for me, not only am I not going to panic, but I'm also going to look at it as a buying opportunity, because I believe, again, this company is going to continue to grow and expand, and I will go ahead and buy it on this dip. So I did a recent video. I'll put a link of it in the corner there on Wells Fargo that I recently purchased stock, and I went ahead and bought more of it actually. So this is exactly what I'm talking about. That's just an example of this. So as you have a dip for whatever reason, whatever event, that's when I will go ahead and buy, because for me, I believe the value of the stock and the company will continue to grow. So I'll buy on this low. Now, what's happened recently is the market is so volatile that when there's a dip, then people like me go ahead and buy, whereas other people who are panicking about it, they'll sell their stock, their 401k or whatever it is, their mutual fund. So they'll go ahead and sell. That makes the stock price drop even further. So if it gets to a point where I purchase it, when enough people like me go ahead and buy it, then what happens is you have an uptick in the stock price. But a lot of times these events, they don't just occur in one day and that's it. Sometimes it's several months drawn out. So inadvertently you'll see other drops over the course of time. And so what I'm doing is, again, as it's dropping and I'm seeing red every day, I'm not panicking about the red. In fact, I'm looking to see that the price where it is, and does it make it a good value for me to purchase. So for every stock I'm looking at, I am looking at the intrinsic value. I'm calculating out the intrinsic value of that stock, what I believe it's actually worth based on earnings and growth rate. And then I'm watching the stock price to see how much lower that price is compared to the intrinsic value. And if it hits a certain point that I'm looking for, that's my time to buy. So you can see I will follow it incrementally. I will purchase more stock as the market works its way down. So the volatility will be up and down, but whenever I see that dip, that's when I buy. That's what these three arrows signify, times for me to buy. So in the grand scheme of things, if this is say 20 or 30 years, I can see this is a stock, for example, that, like I said, will continue to grow, keep going. But in these events, when panic is setting in and people are selling, that's when I purchase there. And right there is the dip where I purchased there. So you can see that that's the trend. So when others are fearful, that's when you're greedy. When others are greedy, that's when you should be fearful. That's what Warren Buffett was saying. That's exactly what this is. Okay, so these are my top tips when it comes to panic investing, especially while others are panic investing. This is what I do. This is my approach. And that is, number one, I do not panic. Like I mentioned in the previous graphs, not only do I not panic, but I actually look for these opportunities. So number one, do not panic. While others are panicking, you do not panic. And number two, along those same lines, I maintain discipline. So as I mentioned earlier, my value investing strategy, I'm looking for that sale price that's way below the value of the stock that I've calculated. And so that's a very disciplined approach. And it's easy to get caught up in the hype a lot of times and to start panicking with everyone else, but it takes a very specific type of investor to really have that discipline. So you really want to maintain that discipline while these events are happening. And in line with that is number three, watch for deals. So as we mentioned earlier, when it drops, those are the deals. So Warren Buffett always says when something happens and it's raining gold out there, that at that point you don't want to be out there with a thimble trying to catch that gold. You want to be out there with buckets. And so part of the maintaining discipline is that I have a certain amount of liquidity, cash stores, exactly for a situation like this. And I'm watching for those deals and I'm going for it and I'm purchasing more stock now while other people are selling them. So this is my approach to panic investing, or rather while other people are panic investing. So if you like this content, definitely give a like and subscribe to the channel for more content like this for all types of investing, not just in stock market, but also in real estate investing and overall personal finance. So I hope to see you on the next video.